just came in town for YC Demo Day, right?
For Demo Day, that's a big part of our fund.
Right.
And actually the Alumni Demo Day, this is the first year they let, there's a fuzzy line between founders and investors now.
Yeah.
So this is the first year they said, you know what, let's just throw it open and let anybody that's an alumni come.
Oh, nice.
So the Alumni Day is a lot more fun. You get a lot more sincerity.
Right. Because it's also like the rehearsal in a way, right, for a lot of the YC companies.
It is. People are interactive, people clap, people laugh at all the jokes, and
Right.
everybody's heads are up and watching, which is pretty cool.
Yeah, otherwise, Demo Day is such a big thing. It's like 2 days actually now, right?
It is.
It's been 2 days for a little while. But so you work for like L2, and you guys kind of really specialize in those kind of early stage, seed stage kind of deals, right?
Yeah, we're a seed stage fund, and a big part of why we started the fund was kind of looked around, and if you look at what some of the resources you need to build great companies, one of the things, and I hate to use the phrase, but it's network, just creates opportunities in a way that other things don't. And if you look at the Valley historically, there's a series of networks that are really influential. The latest probably being the PayPal network. People drive from there. And our hedge is that Y Combinator has kind of already eclipsed that in terms of number, value, and just opportunity.
Yeah, it's very tight-knit,
Yeah, so all these founders, a lot of them have had success, and they're pouring their resources, knowledge, and capital back into that network, and it just creates a lot of opportunity.
And you went through YC too, right? I mean, it's like we worked together
a while ago.
Cloudant. Yeah,
a while ago.
It was kind of fun.
Yeah.
But so it's like for people who don't know, so that people talk about seed stage, and then is that roughly the same thing as early stage, and how is that different than I guess like other stages of funding and looking for funding?
Yeah, I mean it is early stage funding. Things have really gotten hyper stratified, especially since I started a company in 2008, right, which is infinity ago.
It used to be like you just take money from anybody, right, and just it would give you money.
But I mean, this well, right? You've really helped create a lot of this opportunity. But 30 years ago when you started a company, it cost a lot of money.
Right.
You had to buy a lot of things that you just don't have to do anymore.
Right.
Like Cloudant was all about 50 years ago you had to write your own database.
Right.
You don't do that anymore.
Right.
So everything from cloud services to just the way products get launched is just faster and more or less expensive. So because of that, one of the things that you see is there's just a big change in the funding stages that companies go through. So instead of raising a huge slug of money and running for 4 years, right, then it's let's be a little more incremental, get the smallest amount of money that you need, get the idea off the ground, and then go in different stages. So it's kind of like you hear people say friends and family, then you do pre-seed, then you do seed, then you do C+, then you do Series A, right? So, what happens then, there's a whole bunch of new funds that are kind of built specifically and tailored to those different stages.
Yeah, and so it seems like, it kind of is really different, right? So you kind of have, seed is kind of the first kind of organized money you're getting. This is maybe sometimes I even see boards kind of happening around that, although that seems to be rare, right? It seems to be more the exception than the rule. And so this is kind of you moved on from incubators, you moved on from friends and family, maybe helping you get it off the ground, maybe some angels, putting in some money. And seed is kind of that phase where you're meeting both kind of organized investors such as yourself, L2, firms that specialize in that, as well as maybe some angels, some people kind of still piling in on those rounds and
yeah, definitely. So we tend to see a lot of seed rounds where you have 1 to 3 firms, and there are some obviously really established names in seed funding now, like Softtech, Floodgate, first round that are old pros at it, and then 100 new firms, in the last couple of years. So you generally see 2 or 3 funds like that, that are a little more institutionalized and also have some platform and a bigger network, and then strategic angels, who bring a lot of value for that specific.
And then even some of the later stage firms, right? You see Andreessen and a bunch of others still piling in some of the early rounds and seed rounds, even though they're more famous, I guess, for this Series A, Series B, Series C type of plays. Yeah,
you still see a lot of that. Also, sometimes it's investing out of the same core fund, sometimes it's actually a separate fund with separate individuals and partners that kind of run that early stage.
Right.
So it's kind of firm by firm, you have to understand what the relationship is between a seed check.
And just to explain that, right, just people think about those big firms, you think about Andreessen Horowitz, that's the name of the building, but then instead of that, there's multiple companies almost, kind of are allocated towards different goals. So you could have a biotech fund that's running parallel to a clean energy fund. You could have an early stage fund, in the same firm that's allocated towards a certain type of companies, certain type of placement checks. versus the more established investments, and they're really kind of sold as different instruments to the external investors of the firm, and they kind of go towards different people, right?
Yeah, no, it's pretty complex actually.
Right.
So we live in the world of what would be called micro VC, and one of the things I guess as a founder I didn't quite realize at the time, I would think a lot about the brand or the impact or just the success of a firm.
Right.
But what you really want to look into is like what's the specific part of that firm, and who's the partner you're actually dealing with to see. That's the biggest indicator of like success and support.
So maybe we can focus on that a little bit, right? There's so many different people that you can go to for seed, and not just the number, but also the types. You can talk about it. There's this firm that specializes in that. There's a big firm that kind of do all the stages. There's strategic angels. There's all kinds of different money. So what do you think? Going back to your days as an entrepreneur, like going back to the other side, what do you think people should look for at a seed stage?
Oh, that's a good question. So you have some options, right? So at the seed stage, I think. I'll tell you my very personal opinion. I think that the reason I find the seed stage interesting is I think that a lot of the culture and actually trajectory of a company is kind of imprinted in that very formative stage before you get to a Series A. Series A is actually fairly, what do I want to say? There are clear targets. If you're an enterprise SaaS company, you want to be doing 150 to 250 in MRR, 9 months trailing data, 15% month over month, and it's kind of like, okay, somebody is going to invest in this company. Because you can fuel it with capital and grow it aggressively. So kind of getting to that stage though, that's where I think that it's like, okay, who are we? What do we believe in? Can we convince people to use the product? Can we convince people to come work for us? That's where a lot of the great group mentality kind of translates into magic.
And there's still, despite maybe that not being necessarily ideal, there's still like an intense amount of pivot and like just serendipity and like who you connect with and who your first customers are. And so it does feel like, for lack of a better word, more of a cultural type of phase where you kind of want to get to your point about network with people that can help you explore that area and kind of find yourself, even though you feel like you're out of the woods already. Like I find so many companies still reinventing themselves before the Series A. It's kind of crazy.
Yeah, to talk, I kind of hate the word pivot, even though it's used all the time. Show me a company that doesn't adapt to their surroundings. And that's market. Early customers, like you said, can have a pretty strong impact on where you kind of descend to in your path. But yeah, I personally think that you want to surround yourself with very patient investors. And we try to focus really on that stage from first dollars to Series A. And that, then you can kind of hand off to somebody that specializes in that A to B to C transition and then late stage investors. But yeah, that's the part where I think you need to find people that are patient, can give you the right opportunities. I personally think that, investors can never make a company, right? They can certainly hurt it, but I think it's, really up to the founders to carry your own water through the desert. And most startups go through a big grind actually at that stage between first dollars and Series A. That's the toughest part.
It is really hard. And so what do you look for, right? Because there's, if you're a Series A, Series B, et cetera, investor, there's more data to look at, right? There's more of a trajectory. Ideally there's revenue, which is kind of like, a good kind of through line to look at. But when you're at the seed stage, you have very little time, very little data, external validation of what you're doing. So what do you look for in a deal?
That's the challenging part. Well, I kind of compare it to like when I was in science, how I would recruit people to my group, at Cloudant, how we would hire in network if possible. Like somebody that you've worked with before in one relationship or another can really de-risk things. So that's just trailing data, right? But really we look for great teams in big strategic markets, and I can talk more about that if you want to. And what's the last thing that I would say? We also try to make sure it projects onto a mission that we really agree with, and that's been a really cool thing. Like if you use YC as a bellwether, so many fewer consumer apps and so many more aerospace companies and AI and deep learning. Like there's a real kind of return of mission, which I get excited about.
It does seem to drive off of passion, right? At that stage where like as an investor, you need to kind of be invested and have the network to kind of help the company. So, I see that kind of selection, quote unquote bias of like, not in a negative way, but of going towards like stuff that stuff that you like, stuff that you're excited about, because that does seem to be a big part of like, why you can help something work, and grow.
Yeah, I mean, I think, as a founder or an investor or even an employee, right, if you don't really dig the thing you're working on, I mean, we've had a lot of conversations about this in the past. If you don't really dig it, right, then why are you doing it, right? And are you going to be that good at what you're doing?
Right. But that makes sense. So, to go back to the other 2 points, right, you're saying kind of like that personal connection, I guess, that's some way to expand the data available on the company and the people, and have they done things that are interesting? Do you know them from a while back before they did this? And I guess that kind of makes sense. The one about the size of the market is an interesting one. I think it's one that like a lot of people don't understand, especially how you do kind of start a valuation or validation at that stage of saying, it's like what you do is a part of, like, I'm sure, like every investment decision, even at that stage, but like sometimes it really is more about just the opportunity and like sizing that way up, in my experience, to get a good C-level deal.
So like what's the strategic market right now? Like autonomous driving of any type, right? Like it's hard to miss that. Right. And the cool thing is that overlaps completely with something that's like really interesting from a problem set. So that's an example of a market that I think is really strategic right now, like auto, right? Or AI, machine learning, is kind of the same thing if you look at, DeepMind and a few other companies like that are almost pure research plays, right? It's a really fun time when markets like that are taking off. There are other ones that are a little bit different. I think like basically the space market right now is a little bit different, because now you can kind of like hop on a website and choose when you want something launched, and it's launching is kind of commoditized, and now it's like, okay, so suppose it's negligible cost to put something in space. What can happen then with commodity components? So there's an explosion of space companies too.
But there's maybe two factors here, right? One of them is that there does seem to be, like right now, like this summer, and who knows how long it will last, like more of an appetite for bigger hardware plays, things that used to be kind of really frowned upon. But there's also kind of this general trend of like people think you're going to maybe pivot or readjust or find a different market than what you think. So they really just look at like what you're going after, like the cone of what you're going after, as opposed to like the exact sliver that you're going to end up delivering.
Some investors are like very numbers driven from the beginning. I tend not to work that way. I think you just have to be very patient in the beginning and until you find, something that really clicks. And so that's where, as a founder, like if you're raising money, you really have to just make sure that, how you function and how you want to grow the company meshes, right, with the investors that you're working with. But just to go back to some things that we do look for, when we look for team, we look for people that have known each other for a long time, right? Because the number one reason companies fail is not market or execution, it's just founder breakup. And it's like when you're going through the desert, you got to really trust each other. Like, my co-founders at Cloudant, were my best friends, we were colleagues, we stood up in each other's weddings, and when it was a grind, we kept each other going. And then when there's real money on the table, you have to really trust each other, right? Because you're making really life-changing decisions, with a high frequency. So we do look for people that go back to, grade school, or, like if you're talking about space, like they started the rocket club someplace, or the drone team, and have like built real things together before it was a business.
Yeah, that makes sense. Cool. That's kind of a good summary, right? It's like, good personal relationship, great market, and then, everything else is kind of like, based on your passion, both like, the founder's passion and then the investor's passion.
Yeah.
As you're developing your team, a lot of times people will hire for the exact same thing that they are. It's really easy and comfortable for them to work in that particular scenario. But what I tend to find is that those that hire outside of their own profile, both in terms of areas of expertise, knowledge, work style, work experience, tends to add more creativity, which is usually a catalyst to creativity within an organization. Versus if you look at organizations that hire for sameness, yes, they can drive laser focus,